the complacency still on both sides of the coin, the bulls and bears in the markets, is amazing. $100 update in gold, that used to be a dream. And, we had it, and then we didn't get it yesterday. It was only up 80 something. There were people actually disappointed. It's like, and then I see the same on the other side. I see credit markets imploding and people going, yeah, that doesn't really matter. It's stock market matters. And I say the stock market is so small compared to the credit market. It's part of the overall picture, which has kept me so defensive, embarrassed this last few years, because I still don't think most professionals and certainly most retail investors don't have a concept, the real heart of it. We're only just starting to see now what has been festering for a lot of years. And anybody that thinks that it's just going to be one comment from a premier or a president and we return back to normal, I think is going to be sadly mistaken. Yeah, the tariff thing is real critical in the world and manufacturing. But we had this guy come in who happens to be the richest man in the world, just spends a couple months looking at the books of the United States, and he basically showed us that they're cooked, and they've been cooked forever by both sides of the aisle, and it's probably trillions of dollars, and half the people are mad at the guy that he did this, and that they're going to try to destroy his business and hurt any assets that he had, cars that are made by him and all. That's why I talk about that people still have not come to a grasp of the sins. I've said for quite a while that America entered its worst ever economic, social, and political era. And this is just further proof that somebody comes in and instead of people going, he's right. How did all these senators and Congress people on both sides of the aisle go in with nothing and leave or still there and have tens, if not hundreds of millions of dollars of worth? That should be the story that's bigger than tariffs. And it's all part of what I also believe happens on Wall Street, is what I've always coined, it's called the don't worry, be happy crowd. That the cup is always half full. You can toss, I'm absolutely convinced of this. Most advisors could be tossed off the Empire State Building and all the way down. They'll all say the same thing. Hey, so far, so good. It's just the attitude that's what helped us get to this point here. No one's kicking, instead of blaming Trump. Some people are mad at Trump. Some people blaming the Chinese and all. How about the fact that we as a country allowed our destiny to be put in other people's hands financially? All the indebtedness we had to be financed by outside sources. Manufacturing. This didn't just happen yesterday. The Chinese haven't just been doing this for the last year. They've been doing it for decades with our consent. Glad, because big corporate America could go over there, pay very cheap for labor, make the big profits, and pay their CEOs $500 million a year in salaries and all. No one wants to talk about that part. No. So I think that no matter what happens, and I do think, and I don't want to take away from where you may be going, Elijah and Few, I do think next week will be used as an excuse week because it's a thinly traded week, especially by Wednesday or Thursday. But I don't think we've seen the end of this, and I think this picture is going to become even more volatile as the weeks and months ahead come about. But how did most investors miss the best investment over the last 25 years? That's been gold. And even if you look at when I said in 2021, when I decided and I shared with my followers and clients, hey, I just think if you want capital appreciation, it's not going to be found in stocks and bonds. It's going to be in gold. Forget all the other reasons, just that it's going to be able to make more money than stocks and bonds. How did 97 or 98 or 99% of financial advisors who have really no exposure or so little exposure to it, how did they miss that? Why did they miss it? And why aren't their clients saying to them, why did gold go to 3,200? How come I don't have any part of it all? Because gold has proven once again, for what you and your father and people like you, other companies that do what you do, been saying for decades, it's the only true storer of value and protection when all hell breaks loose, that brings the safety and peace of mind. And that's what you could take a run around the bases for how young you are, but I know for these years that you've been in it, that's what you try to share with people. And yet even now, despite all of that, it's still laughed at and frowned upon. It still gets 30 seconds on the financial network because one guy happens to be half bullish on it. It's just an amazing phenomenon. And you would think that your office or whatever would be overrun by people now, given what they've seen, what's transpired. And yet most people are just hoping that they can get back in stocks and bonds and still aren't considering gold as at least what we've always said it is the insurance that you hope never have to be called upon to be used. Well, first, and I want to get to silver because you'd be surprised. Well, you might not because you read my stuff, but something that I did with silver that I haven't done in quite some time. So I think it's important to take a step back. The Secretary Treasurer said this before all this tariff stuff started. He made a very good point. He said that the top 10% of wealthy people in the United States own 86% of the assets, stocks, bonds. The next 40% own 14%, and half of America owns nothing. They're just indebted. So really what we need to be really looking at is what is that top 10% doing, because that's who's going to influence what prices do and so forth and so on. What's most interesting, something that I never believed we would see, which we saw more than once already this week, and I will get to silver. We saw stocks down, bonds down, and the dollar down all at the same time. I don't ever remember seeing that in major moves when there was a major move in one of those markets. And only one thing went up, gold. So anybody that wants to tell me, and all the anti-gold people and this, that's your answer. What gold has replaced the bond market and to some extent the dollar as the place to go for safety, which we've argued for years was the thing to do when you could have bought that insurance for a lot less money. And so to answer your other part, earlier this week, I first came to the conclusion that those who have said silver is manipulated, I absolutely agree with them. In fact, I painted a tinfoil hat on my head and put it out as a picture. Now, most people, including know that this is what mostly has come out of Grandich's mouth for decades when he was asked about silver. Silver is like kissing your sister. And my argument always was, you want to own gold first. But you're absolutely right now. The spread between it, and I've never been a big believer in the ratio because there's no set rule for that. That's just looking at the prices over years and years to be extremes. But like you said, other than one other time in the modern era, it hasn't been at this level. And what I think is going to happen, what I think doesn't mean it's going to happen, is there's going to be a quick profit taking in gold. It may come from $500 higher, which could be just a week from now. But we're going to have a very sharp down. And I think next week we're vulnerable because of the thinness of trading as we get closer to the three most important days for a lot of us like you and me that will take place during Holy Week. But I also think what will happen is more retail people now will be looking at the metals, and the more the retail is involved, the more likely they'll choose silver versus gold, especially in the discrepancy of the price now. So when silver broke down the other night and was trading between 28 and 29, I shocked. Long-time clients wrote back, said, an email, Peter, you sure this is true? This is not some artificial intelligence thing that somebody has created for you to actually say you're bullish on silver? But I really think going forward, if you take the price today when we're speaking and the price of gold, I think silver could outperform gold for the rest of the year. I think they're both going to end up higher than where they are now, but I think silver may actually go up more percentage-wise. Part of that is simply because it hasn't performed up until now. It's not the monetary asset like gold is, but I do think it will be, because it's been a cousin of gold, it'll get some of the interest that might have otherwise went into gold, but now those people think gold is just too highly priced for them to be involved with it. That's an individual decision. I would say this. I would say that if you were 80 or 90% gold and only 10 or 20% silver, I would look to be more 50-50 now. So if you are somebody that has a lot of gold but not a lot of silver, yeah, I think that swapping, which is probably music to your ears, but the bottom line is I think it's a worthy thing to do if you're going to have interest in the metals. I certainly, for the first time now, seriously look at it in equal terms. And that's a lot for me to say, because I used to get very people upset in the metals community, where I could be roaring bullish on gold and not on silver. They couldn't understand why, but I do think it's worthy of that now. Well, gold producers are going to be, if they're not started to already, will be among the most talked about for at least the next several weeks to few months. And here's the reason why. Their free cash flow, which was already at records, it's astounding now with gold at 3,200. And two of the biggest costs to run a gold mine, energy, oil, and labor costs, which certainly people are not going to be in a position to seek substantial higher wages, will be flat to down for them. So they're going to print money, and they're going to be printing money at a time when most other sectors and other industries are flat to down in earnings. So I still think the gold producers still have a ways to go. And a barometer, the GDX, is breaking out. And even the GDXJ, which is the lower small to mid-size producers and some advanced stage exploration companies. The last to go, of course, still hasn't, but they're starting to muster through volume and are the real junior, highest risky ones. But I still think that market's ahead of them. And the reason I feel good about that is, despite huge sell-offs in the market, even on gold on the particular day that it went down hard, the shares didn't really come down hard, especially the juniors. They're completely washed out. Their trouble to get really going remains not enough of an audience. There's not enough. I continue to argue that industry is a lot smaller than it was 10 or 20 years ago, but their day in the sun is here now. And I'm speaking my own book, because that's where a lot of my own personal wealth is. So I obviously I have huge biases in that, but I feel rather comfortable now, more than ever, sleeping at night with those things than I have in the last 3 to 5 years.